Speaking of jobs, we saw the latest unemployment data out today for the month of May. Of course, this was the month the election was held in. The unemployment rate remained steady at 5.2%. More jobs were created. Full-time jobs up 2,400. Big jump, though, in part-time jobs, up nearly 40,000 places. In all, the total jobs increase 42,300. What was also interesting was a further increase in the participation rate. That means more people are in the hunt for work, looking for and entering the jobs market. So they were the figures out today. Let's check in on the business report now with Chris Kohler for some of the reaction to that. And Chris, what's been the reaction to the numbers there today, and what does it mean, I guess, for the prospects of another interest rate cut?
Yeah, well, it certainly hasn't been seen as a hurdle to the interest rate falling further. I mean, look, as you said, today's headline figure's pretty encouraging, but once you dig below the surface, some kind of good and bad news. As you mentioned there, 42,300 jobs being added, well ahead of the expected 16,000 that was being priced in by the markets for the month of May. As you said there, 5.2% was the unemployment rate. The market had been predicting that to come down slightly to 5.1%. Now, just yesterday, Lucy Ellis from the Reserve Bank said that the RBA's new look when it comes to the labour market is for 4.5% to be the neutral rate, to be the full employment rate. So any way you look at it there, 70 basis points is how much higher we are from that level right now. So they need the unemployment rate to fall quite a bit further. We know that the Reserve Bank has had a real laser focus on the jobs market for some time now. We obviously had our first interest rate cut for 33 months just a couple of weeks ago. Now, the market is definitely expecting there to be more cash rate cuts to come in the future. Market expectations right now for August and then possibly another one in November, David.
And how did the market wrap up today, Chris?
Yeah, the market was pretty much flat as a tack at the end there, 6,542 points. Energy and material stocks weighing on the market, banks doing their best to keep in positive territory. I think one of the most interesting stories today was from Afterpay, which got absolutely slammed, down over 12% after AUSTRAC, the Australian financial crimes watchdog, said that it was planning a full external audit of Afterpay, the very popular buy now, pay later system, to make sure that everything's above board and that there's no money laundering or terrorism funding going on there at Afterpay. Of course, just 12 months ago, there was a huge settlement between AUSTRAC and CBA, so the market was pretty spooked by that news today.